All right, what's going on, guys? Jeff here. Today's Saturday, and I want to talk about some troubling catalysts that we have up front. Okay, so as you guys probably have been looking at the current state of the market, it's pretty bad. Okay, Nasdaq, the QQQ was down more than 4%, almost 5% intraday yesterday. SPY was down about 3% or so. Dow was down 800 points. Okay, everything is down by a huge margin, and people are saying that this 4 month period of us actually going down was more of a downward pressure as compared to what we actually saw back in 2008. So this kind of brings forth the fear that we have in the market. Are we going through a recession? Is inflation going to be transitory? And what's actually going to be happening in the market? Okay, so of course I'm going to be going through some of the catalysts that I fear there's going to be a concern of some sort. Okay, first of all, we have to talk about how the FANG have finally finished with their earnings and the combined losses that the FANG actually came together, inclusive of Microsoft. Okay, the inclusively lost $1.4 trillion in terms of market cap, and this is because we added Microsoft that have a good earning. If you actually took away Microsoft, you basically lost about $1.8 trillion in terms of market cap. So let's talk about it. Okay, FANG. F for Facebook. Facebook did amazingly. Okay, well, I won't say amazingly, but they did better than what they actually showed from last quarter. So pretty nice and all. Okay, next up we got the two A's, which is the Apple and Amazon. Amazon gave us very, very disappointing earnings, which I actually explained to you guys from yesterday's daily news as well. And for Apple, Apple actually gave us a bad guidance. Apple do not guide, and they actually gave us somewhat of a scary and concerning forecast for what's going to be happening for the next quarter. Next up, we got Netflix. From the previous quarter, losing 40%, and then in this quarter, losing yet another 40%. Netflix is down a total of 70% from its all-time high. And honestly speaking, they still do not have any sort of a good point looking forward. For Netflix themselves, even they feel that the forecast for the next quarter is still going to be a loss of subscribers. So of course, it's still not going to be all rainbows, all clouds and rainbows for Netflix, even in the next quarter. So that's going to be something for them to actually look concerned about for the next quarter. And last but not least, we have Google. Google definitely did slightly better than we expected. But honestly speaking, I do think that because Google, as a company, Alphabet as a company, they do have a lot of different products, and their products actually are high margin businesses. Cloud computing, okay, and the internet business, the data business, I do think that those are the higher margin businesses out there. And that's why I do think that Google definitely played a very, very good part. Advertising has always been a high margin business, especially for Google. Okay. Which is why it's kind of obvious that you can kind of tell Facebook is doing well. You see Google doing well, and the rest of them are doing very badly. So clearly, it simply kind of shows that advertising is the one that's actually winning in this current battle. So personally speaking, I do think that in 2023, 2024, when businesses start to really come back up, where businesses start to really become competitive again, people are starting to actually plow in money into their businesses to try to fight marketing, to fight, to see whose penny is going to work like a dollar, and so on. So those are the time that it's going to be more frivolous for us to really look at, because that will also be the time where Google, Alphabet, and Facebook will start to actually have a huge income from their advertising revenue. And that's kind of where I'm hoping for, of course. But it's all in retrospect that we do not have a recession. And of course, right now it's very hard to tell people that we are going to have a recession or not. However, the thing is, because I think about 2 weeks ago, Jerome Powell came out to say that 50 basis point is on the table. And the moment he said that, we get one entire week of a down market on the indexes. The SPY went down continuously 2% every single day until the week ends. The Nasdaq now 3% every single day until the week ends. Dow Jones down about 2% every single week until the week ends. So the thing is that what Jerome Powell basically said was to put the 50 basis point on the table. And what the Feds like to do is sometimes to scare the market a little bit so that the market will not be so frothy. And when the market is not so frothy, the Feds can come in, swoop in, and kind of save us all. So there is a good, very, very good possibility that the Federal Reserve, for the 5th May FOMC meeting, they might actually come out to say that, we're going to go on with the 25 basis point because we think that the economy right now might not be able to handle a 50 basis point hike. That could be the case. And if the Federal Reserve actually came out to say that, I would believe that a rally would definitely be happening. However, this rally, do understand, is not going to be going on for a long time. Okay? It's not exactly a good thing. It's a good thing that they come out with a 25 basis point hike. Everyone's going to be happy. Okay? All your tech stocks are going to be happy. Growth stocks are going to be happy. Even your blue chips are going to be happy. Because the thing is that it means that risk on assets are favorable again. However, if we look at it from a macro point of view, inflation is not going away just yet. Of course, from the previous CPI, with the core inflation actually only going up by 0.3%, but of course, from the year-over-year perspective, it's actually up 8.5% for the inflation. So, of course, that's going to be concerning to a certain extent. But you do need to understand that if we actually take into consideration of an 8.5 year-over-year inflation data, okay, 25 basis point increment for the rate hikes is not going to help at all. At all. Okay, what 25 basis point increment simply means is 0.25%. What is 0.25% going to do for an 8.5% inflation report? And this is also the next catalyst that we have to talk about, which is the next CPI. The next CPI, I feel, is going to be really important. And I feel that I'm basically going to be a broken record at this point. Okay, every single time I say that this CPI is going to be important, this CPI is going to be important. And it's always because every single CPI, something bad happened, and we need the next CPI to save it. And this kept on going on and on. So from the previous CPI that we had, it was a 1.1 month over month. Or was it 1.0? Something along that line. Okay. And right now, what we need in the market is to see a desperate downturn, a desperate disinflation happening for the next CPI. May I say 0.4%? And I don't want that to be called 0.4%. I want it to be in totality 0.4%. Of course, I don't think that's a very, very good estimation or an expectation to have for the next CPI. I do think that the street consensus is going to land around 0.7% or so, or 0.8%. I do believe that would be the general consensus because, of course, consumer spending is definitely going to be going down. But my constant worry for consumer spending going down is inflation. As much as people are spending lesser and lesser, inflation keeps on going up. It's not going to save anything, which is why the Feds need to come in hard. And I do think that at a certain point of time, I do think that the Feds need to kind of force a recession. And of course, if we're talking about forcing a recession, no one's saying that this is going to be good, okay? Because this is going back to Paul Volcker era, okay? And this is going to be horrible for everyone. It's not just for it's not just going to be bad for the economy alone. Because the moment a recession hits, okay, it's not going to just be consumer stuff, okay? It's going to be real estate, okay? It's going to be businesses, okay? It's going to be every single cost beneficial items out there that's going to be affected. And that's my worry. So yeah, I don't want to say that, recession is definitely going to be coming, but personally speaking, my own possibility, me putting a number for a percentage of possibility out there, I think we're getting over 50% for the recession. And I do think that we need to get to the recession faster. We need to get to the recession faster. And of course, by no means am I saying this because I'm getting out of the market or anything. I'm still happy about the market to a certain extent because I'm still hedging my position here and there. Okay, of course I'm losing money. Okay, anyone who bought anything from November of 2021 and did not do anything till now, chances are you're down 50%, or you're at least down 30%. It doesn't really matter. Okay, be it in your ETF, your indexes, okay, your growth stocks, your value stocks, your tech stocks. It doesn't matter. Okay, out of all these stocks that you can probably buy, out of the millions of stocks out there, chances are only that 1% of stock that did not actually drop down in value, like Ubiquitous or something like that. But other than that, a lot of the stocks are actually dropping down from the November 2021 highs. So, of course, I do not want to sound bearish. I do not want to sound like a broken record. But yes, I definitely think that a recession is very, very much needed. The catalyst, okay, to just sum up this video for you guys, the catalyst that I do have, okay, since the first one is already over, which is the FANG's earning, clearly didn't really give us good numbers or good expectation for the whole entire market and economy. The second one will be the FOMC meeting that's going to be happening on 5th of May. The third one will be the CPI that we're going to be having in the second or third week of May. That's going to be very, very important as well. And lastly, it's going to be the end of the earnings. At the end of the earnings season, I want to be looking at your tech and your growth stocks. Those earnings are going to matter a lot. Not because it's going to be affecting the economy, because that's going to be affecting retail investors. If retail investors are going to be shying away from the market, getting out as fast as they can after looking at bad earnings at all your smaller companies, okay, be it your Palantir, be it your, I don't know, like SoFi, all those smaller companies, be it your micro cap, small caps, whatever it is, those growth and tech stocks, if those companies fail earning and drop by 20%, just like what Robinhood did, okay, if those companies continue to show this sort of earnings, do you have any idea how many retail investors are going to quit this current market and never invest again? A lot. A lot of retail investors are going to get out. And you have to understand that the more retail investors leave this scene, the more dangerous it is going to be. Because if they are going to all get out from the market as it is, okay, institutional investors would not be able to really perform as well. Algorithmic traders will not be able to do as well either without the retail investors. And that's why I do think that this might be a very, very random catalyst for you guys to actually look out for. So yeah, these are the 4 catalysts that I'm looking out for the next 2 to 3 weeks or so. I do think that that's going to be a little bit troublesome, and of course, with the whole cryptocurrency scene as well, I do think that cryptocurrency is starting to show a lot of its flaws. I don't think that cryptocurrency has shown this weak of a side ever since they actually skyrocketed to what they are actually known for, especially back in 2020 and 2021. But yeah, I do think that cryptocurrency, I feel that if after 2022 and 2023, if cryptocurrency is still around and is still hyped up enough and have a proper use in a proper use case in its current decentralized system, then cryptocurrency is most likely going to stay. But right now, what I fear is that people are getting so shook to the core. Every single cryptocurrency is down at least 50%. Well, other than Ethereum, I guess. Bitcoin is down from the all-time high. Ethereum is down not 50%, maybe like about 30% or so. Everything else underneath is down 50, 60. The worst case scenario are 100% down, where they basically just went to zero. So cryptocurrency is definitely going to be showing us some flaws. And that's why I do think that, if cryptocurrency can somehow last until the end of 2023, that's gonna actually give us some form of a hope that cryptocurrency might not be all that useless after all. And of course, then you're going to be triggering the whole topic for NFT and such again. So, but yeah, I just wanna just bring out the possible catalyst that you guys might want to look out for in the next following weeks. My name. Thank you guys so much for watching, and I'll see you guys next time.